risk is back in vogue on Wall Street in 2023. The Nasdaq is up nearly 15%. That's nothing compared to the rebound we've seen in beaten down names like Carvana. Okay, stock's under a little bit of pressure this morning, but it's up 200% to start the year. Keep in mind, though, still down 90% over the past 12 months. Is there anything fundamental about the company that is leading to this massive rebound? Or will this end in tears for some investors? Let's bring in Brian Nagel, senior analyst at Oppenheimer. Brian, too far, too fast?
Well, good afternoon. Look, it's hard to say. I think your opening was perfect because I'm getting a lot of questions on Carvana from our clients. And yes, I mean, the stock has essentially quadrupled, off of its recent lows. But we also have to keep in perspective, this is a stock that was trading $370, back in later 2021. So it's still well off those highs. But look, as I think about fundamentals, I'm thinking about Carvana as a fundamental analyst. I don't see much improving for the business right now. Now, one of the bigger questions, and one of the reasons I'm not recommending our clients in it right now is that, in my mind, or per my math, there's still what I call a significant funding gap here. I mean, this is a company that will need to raise additional capital in order to sustain its business model. I think to a certain extent, now, obviously the Carvana stock price has rallied with other similar type names, but I think maybe the market's getting less concerned on that front. That the capital markets will open, will allow Carvana to garner the cash it needs to run its business. But it's a very, very difficult stock at this point. It's
difficult, and there's been a lot of concerns around the possibility of bankruptcy as it has been pinched for cash. To your point, it raises questions not only about, about Carvana, about sort of this quote unquote dash to trash, and some of the other names that have been beaten down, some of which I know you cover, that have been seeing huge rises since the start of the year as well. Talk to me about Peloton.
Look, it's a very similar dynamic. Now, Peloton, we are recommending. I've got a $20 price target. And, the way I look at these names, and again, this is a longer term type approach I take is, I think of Peloton. And look, there's a lot of concerns there near term. I also think that company's going to have to raise money. They're fighting now what I think is a rather significant wave of gym goers going back to physical gyms. I'm going to say Lifetime Fitness, LTH is one of my favorite names here. They're benefiting there. But with Peloton, look, I think my message to our clients is I do see a spot within the broader fitness sector longer term for a well-run, much more cost-conscious Peloton. Near term, it's harder to call because, again, there's a lot of these near-term risks right now.
I mean, Peloton's future may indeed be in the monetization of its app more than in the selling of its gear, if I had to make a guess on that. Back to Carvana, why in the world would it be up 4 times from its low? What is the mechanism by which that happens, other than irrational exuberance?
Well, Tyler, look, I mean, I think it's hard to explain succinctly. Okay, I think to a certain extent, it's simply a function of how far this stock fell. Mm-hmm. As you got a graph, you put the 2022 chart. I mean, the stock ended 22 with a 4 handle on it. I mean, the stock had moved significantly lower, and a lot of that, was in a very, very tough market against very negative market sentiment. But really, I think the primary concern is this company going to survive? Okay, so as we look at the market now. Again, this is obviously a much bigger question with rates and capital markets and such. The chances of Carvana going out of business are probably now somewhat less. And that's why I think you've seen the stock have this rather significant bounce off its lows. But again, I want to emphasize, it's still well off the highs.
Well, yeah, we're looking at a chart over the past couple of years. It looks like the Matterhorn. I mean, up it goes and then down it comes. And even though it's tripled off the lows, you can barely detect the move against that Matterhornish kind of chart. Brian Nagel, thank you. Appreciate it.
Thanks for having me. Appreciate it.